Welcome to another weekly update for the overall stock market. Here's where we look at the long-term trend and the short-term trend. It's Sunday, the 28th of January, after the market closed on the 26th. It's important to look at the stock markets, if we're in a bull market or a bear market, any impending sign of any trouble or anything at all, because that's an early warning sign for the overall economy, not to mention your individual pension plans and investment funds. All that money's in the stock market and you do not want to be a sitting duck. Anyway, so here's a look at the, this is the multi-year chart here, going back through 2015, 16, 17. My proprietary signal gave this was a brand new bull market in November 2016, and it has not given the sign to get out yet. In fact, just the opposite. For the last 1, 2, 3, 4 market has gone into absolute overdrive. Here you see it here, one new high after the other, week after week. It's gone crazy. We see 90% of the RSI now. It's such an incredibly powerful head of steam on it now. And every week you think it's got to turn around, and it just keeps on going, which is, the danger of shorting a market and going against the trend. People have been trying to fight this market, go against the trend for a year now, and they've all lost a lot of money. We don't fight it, we go with it, which is why it's important to identify what the trend is, because it's you want that swimming in your favor. Here's the daily chart then, day-to-day action here. You can see now the price, even compared to the 50-day moving average, which is the red line there, has just left it in its dust, new high after new high. Let's look at what is the how far above is the average above its line now compared to 1987, which is a number that keeps getting compared to it. And I do it myself because it is interesting. At some point, people start to get worried. They start to cover their short position, cover their downside. 2520 is the current 200-day moving average. Plus 17% is what it was back at the peak in 1987, brings it to 2948. So it's still not there yet. Although I think if you see the Dow Jones, it's already there and past it actually. 22,563 plus 17% is what it was in 1987. Takes that to 26,398, so it's already above that So the Dow Jones is already above 1987 peak levels. No sign yet, though, that it wants to change its mind. Here's the composite. That's all the indexes out put together. I'm not seeing any sign of any distribution or selling yet. So longer term, it's absolutely 100% a bull market. It has been, and I've been saying that for well over a year now. Short term, what's going to happen? Just like I said last week, and this was the date then on the 19th, that weekend. Now I said there's no reason to see why this market's going to turn around for the next week, and there it goes, another new high. Likewise with this week, I do not see any sign yet to say this is going to turn around over the next week. Let's look at a couple more indicators just to make sure. This is the percentage of stocks over their 50-day. That's definitely getting up there now, in peak territory. Not to say it can't stay. Is there any sign of people buying volatility insurance on the VIX? No, it's crashed down to about 11. Still no sign yet that this is going to only correction this time for this week. So cautiously pushing forward, enjoying the bull market, and I'll speak to you next time.